With me FIDC representative today, Mr. Raman Aggarwal, to assess how does NBFCs, the financial intermediaries which are beyond banks, some also like to call them shadow banks, are coping with this renewed reality that money will be difficult to come by, and the client base themselves are going through difficult times, so money repayment will also be an issue, and so will be collections. Mr. Aggarwal, first let me ask, what is your assessment of the community, the smaller intermediaries, NBFCs? How bad has their business been hit? Do you think it's just about a 21-day lockdown, but a quarter will be gone by, or do you think the first 6 months will, vanish for them?
So before I just quickly answer, let me just quickly correct that the term shadow banks has now been officially dropped by RBI and World Bank. So I think because we are different from the so-called shadow banks of the world, we are very well regulated. Anyway, coming to the core point which you raised, yes, see the class of borrowers which NBFCs cater to are the worst hit. Now you look at the small-time three-wheel auto rickshaw drivers, the e-rickshaws, the small tempos, or a small shopkeeper, trader, MSME segment, consumer goods. So these are the small-time guys who are the worst hit, and they form a big chunk of the borrower class who an NBFC cater to. So if you ask me the situation, yes, situation is grim, but I guess that's true for across the board. It's a global pandemic, everybody is suffering. But what is really, I would say, unique for NBFCs is we are intermediaries, we are financial intermediaries. We borrow money, we lend money. And money is something which is very difficult to come by. So, well, we are grappling, things are going ahead, but what I see is that it's not only the lockdown, the challenges will continue at least for 2 quarters beyond the lockdown.
Right. Mr. Aggarwal, what would you like to see? What is the expectations of the industry? How can the well-being of mid-sized, mid to small-sized NBFCs be ensured, because they are the ones feeding the need for capital for lower end of the strata?
Absolutely, I think that's a good question you've asked, and that is where we have. While RBI came up with some very bold measures, and I think we thank and we congratulate Governor Das for some very bold measures announced, especially things like the reverse repo rates, excellent moves. However, there are certain areas which I think needs to be looked at, and some fine tuning needs to be done. So, for example, let's take the point of moratorium. Now, let me put on record that FIDC, actually, we wrote to the ministry and RBI asking that we should be allowed to give moratorium, because as I told earlier, the borrowers whom we cater to just can't repay in this scenario. Now, what has come up is the moratorium announced is left to the discretion of the individual institution. Now, while that may be fine for others, but what happens is that is where a lot of small, medium-sized NBFCs are worried that while we may be almost forced and we would want to give moratorium to our borrowers, but what about the moratorium on term loans from banks, our lenders? We've also borrowed money from banks. That is something, since it's a discretion, each bank board will have to take an individual call. While we hope that we do get it, but going by the past experience, what happened post ILFS, suddenly banks became risk averse. And that is where we were faced with a liquidity crunch. So the fear is, the apprehension is that while we may be giving moratorium, but our liabilities in terms of bank borrowings especially also need to be ensured that some kind of assurance that banks will also give us moratorium. And that is very true for even small, medium size, even the other liabilities. For example, the commercial paper borrowings, bonds, mutual funds. So, otherwise we are creating mismatch in the system. So some kind of assurance on that front also needs to be done to make it very effective.
Right. All right, Mr. Aggarwal, we'll leave it on that note.